Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a double header for you. We're going to be joined by two guests. The first is Anthony Power, who's quickly becoming one of the go-to Bitcoin mining analysts in the world. The other is Sebastian. He's a fellow YouTuber in the Bitcoin mining space. And in today's video, the three of us are going to be discussing all things Bitcoin, our top picks in the sector, and some of the key trends that we're keeping our eyes on. Now, before we get into that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you think about today's discussion, if you're holding any of the miners that we talk about, and what your price prediction is for Bitcoin moving into next year's halving event. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's double header, we've got Anthony Power all the way from the UK. He's quickly becoming one of the most known Bitcoin mining analysts in the world. He's got some exciting travel coming up, which we'll talk about in today's video as well. We've also got Sebastian, who's a fellow YouTuber in the Bitcoin mining space. Sebastian's been on the channel a number of times, a ton of valuable insight. And we're looking to have a discussion today on what we've personally been doing in the Bitcoin mining space with our channels and social media, and what we're seeing or noticing kind of more on a macro level. So guys, thanks for being here and really looking forward to this chat.
Yeah, thanks. Yeah, thank you.
Great. So to update, Anthony, I know you've been super busy. You were on the channel a couple of months ago. You've had a number of other things going on in the space. I see the Twitter followers growing on an hourly basis, it seems now. So congrats there. What have you been up to, and what are you working on right now?
Yeah, I've been busy doing some of the podcasts. Been doing some Spaces meetings, and I've got a couple of conferences that I'm booked into in October. So I'm going to Amsterdam, the Bitcoin conference in Amsterdam, as a speaker. That takes place on the 12th and 13th of October, so I'm really looking forward to that. I think more than half of the miners I cover will be at that conference. That'd be great to catch up with quite a few of them. And at the end of the month is the Alternative Investment Summit in Dubai, and I'm going to that conference as well, which takes place on the 30th and 31st of Dubai, 31st of October. And there's going to be about at least 6 or 7 of the miners there. So the likes of Bitfarms, Iris Energy, CleanSpark, Marathon Digital, Hive Blockchain, Hut 8, all the big players are going to be there. And the difference between those two conferences is obviously the Bitcoin conference in Amsterdam will be like, it'll be everyone who's a crypto fan and Bitcoin fan will be there. But the alternative investment conference is more of a financiers. You're looking at hedge fund managers, finance managers who want to look at alternatives, strategies for investing. And so, part of that will be looking at Bitcoin and then the miners who mine Bitcoin. So, there'll be, 500 to 1,000 people there, all in suits. And that gives me a really good opportunity to talk to some of those, those investment companies to get their feel about how they see these miners, but also get some quality time with some of the CEOs and chief mining officers of some of the biggest miners that we all three analyze each month.
Yeah, that should be exciting. I know we were chatting about the Dubai one just before we started filming and the difference in the audience there. Do you have a new suit? Is it all ironed up and ready to go, Anthony, or what?
I have a suit ready to go. I mean, the weather in Dubai, thank the Lord they use the air conditioning there, because even in October, I'm assuming it's going to be sort of like in the 40s. I've been to Dubai before in October, and you come out the airport and it's like you walked into an oven. And but the great thing about Dubai and about the UAE is that once you're inside buildings or shopping centres or hotels or public transport, air conditioning is obviously key to that location. And you looked at Marathon Digital have actually started mining in the UAE. They've got a joint venture out there and they're mining now. And one of the great appeals to them was the fact that the country uses all this energy during the day, but at night that demand drops because there's less requirement at night to have the air conditioning on full blast all through the evening. Through the day, yes, when the sun's out, but it gets a bit cooler at night, so the demand for energy is down, and therefore, businesses like, industries like Bitcoin mining can step in there and tap into that extra energy available and get really good rates. And that was one of the obviously things that attracted Marathon Digital to that particular area, because I'll be honest with you, before I heard them going there, I mean, you could draw a map and that would be the last place anyone would be looking to mine Bitcoin. But now we're starting to see all those surrounding Middle East countries getting involved in Bitcoin mining. So it's going to be interesting to go out there. I mean, from a Bitcoin perspective, Dubai is probably the capital of Bitcoin. If you looked at on the map, where a lot of the analysts, YouTube influencers, they tend to base themselves out in Dubai. So it is like effectively the world's capital for Bitcoin. So it's going to be interesting few days. I'm taking about 4 or 5 days there. So hopefully, get some good one-to-ones, which maybe inspire me to get some more articles out, and and keep the enthusiastic Bitcoin mining shareholders interested in these companies, because the content needs to keep coming out every month, and it needs to keep coming out at a good level as well, so quality level. But yeah.
For sure. And the no tax is another big draw to Dubai for a lot of the YouTubers. Now, Anthony, you mentioned, what's that, Sebastian?
I think that's the main draw there, is the no tax.
Exactly, yeah, but I can't handle the heat.
As well, yeah.
I like my cold Canadian weather. Now, Anthony, you mentioned 2 things I want to touch on in the next part. Sebastian, I'll let you go first here, but we're talking about heat, and obviously we've seen some Bitcoin miners really benefiting from heat and some not so much. And then you also mentioned the finance community and some of these big bankers that are wanting to talk to the Bitcoin miners. Obviously, the spot ETF is a big macro thing in the community right now. So I just wanted to flag those, Anthony, because you mentioned them in your intro, and I think those will be great for the next section here. Now, Sebastian, I know you've been super busy as well. I've been really enjoying the videos you're putting out. Can you give us an update on what you've been focused on?
Yeah, so I've been focused on what I've been always focused on, is just getting as much data as I can from all the miners and everything else, trying to figure out what's going on with them, how are they processing, how are they doing, and then also looking at some of the historical data that we do have with them as well. So latest video that I did was on year over year, how much did the miners grow, how much did the network hash rate grow for Bitcoin, and do a comparison. Is the Bitcoin miners growing faster than Bitcoin network? And it does look like it is. So I've been just staying busy with those types of things, just running the data as best as I can and putting out good content.
Yeah, that's what people come to you for. I know I get a lot of valuable stuff out of those videos, and we appreciate it. So on a macro level, you guys, maybe let's start with the spot ETFs. I know that's one of the biggest things people are talking about right now. We saw some delays, some favorable rulings, but some delayed outcomes there. What's your take? Maybe we'll start with you, Sebastian. Are we going to see these this year, or do you think it'll be into 2024?
That's interesting, because I think I just read an article today that Gensler said that even though that the court case was against the SEC, he's still not taking that into account to his determination whether or not he's going to allow us to buy Bitcoin ETF. With that being said, I think we're probably not going to get it until maybe 2024 sometime. When that's going to happen, I just don't know.
And last time we chatted about this, you had said you think it'll be kind of a unanimous approval for a batch of them. Are you still feeling like that?
I think that would be the ideal way to go, because that way you're not favoring one over the other, and that way the money doesn't flow into just one in the beginning. So if I was the SEC, I think the best thing to do would be to put it all in at once. Let everybody have their share of it. Let the money flow where it's going to flow into, but that way you're not, you're not having one massive company with a lot of Bitcoins, ETFs on it, and everybody else is just trying to pick up their crumbs.
Makes sense. A little more fair, I guess, that way. Anthony, what's your take on spot ETFs in the States?
I think it's inevitable. I think the timing, I probably, one side of me would certainly say, 2024. I mean, Mike Novogratz came out this week and he's saying October. He's the head of Galaxy Digital and probably has his ear to the ground. But like anything, I mean, we had the Ethereum fork going on for about 2 or 3 years before it actually did it, and so who knows? But I think it's inevitable. Bear in mind, we're talking about a spot ETF in the US. There are spot ETFs all around the world at the moment. So there is one. Canada's got spot ETF. I think the UK and I think the Middle East as well as a spot. I think Dubai have a spot ETF as well. So there are other countries that have got these. So I'm sensing. I see some of the sort of like the feedback is like obviously Bitcoin price will go through the roof as soon as it happens, but there is an opportunity around the world at the moment to invest in spot ETFs. The US will be the biggest market, so it might give some traction. And I just look at everything helps towards adoption. We just need to get adoption, bigger. And I always use the analogy that the Bitcoin at the moment is like, we're at sort of the iPhone 3 stage. iPhone 15's come out now, but we're still at iPhone 3. We need to catch up. And we will catch up. We just need to go through those stages, and we can go back to like when the internet started and people said it'll never catch on, and look at us now. We're here talking via the internet. We're using our phones for I don't know how many hours a day we're using our phones, but I know it's far too much. All our devices, we use them far too much. We rely on the internet all day long, and maybe Bitcoin becomes part of our life in the future, like other things that are part of our lives now. So, I was speaking to someone this week about how often I go to the bank to get cash, and it's like I'm thinking 2 or 3 times a year, because everything I can pay for is on my phone, and it's only certain places where so I'll give you examples that I play golf a couple of times a month, and at the golf club I have to pay in cash. They don't take card, so I have to make sure I have some cash with me. Things like if I wash my car at a garage, they want cash as well. So there's certain things that you have to put. 99% of things that you buy nowadays, it's by card or use your phone. You can do Apple Pay or whatever. And I think once Bitcoin gets to that stage, like it's operating in certain countries at the moment, like El Salvador, then it just become the norm, and people have bought into it then. And it's just about adoption, and we're still very early. I mean, we're still what was it, 14, 15 years since creation, and we're still early. And 90% of all Bitcoin's been produced. We've got another 10% to go, but it's going to take another 117 whatever it is years to do that. So that's my take on it anyway.
Great. And you mentioned South America there, El Salvador, and I just watched a video of an elderly lady paying for produce with Bitcoin there, and it was really cool to see. And I think you're right. It is going to slowly become just a mainstay part of our day, and the more adoption and the more people that it becomes the norm to, obviously the more demand for Bitcoin. Now, you also mentioned price, Anthony, in your response. Price action on Bitcoin has been really odd, I guess, to say the least, over the last few months or quarters. Do you think the price is pretty much held in this range until we see news or decision on this ETF? Or is there anything else that can kind of break us out of this range? And Sebastian, maybe we'll go to you again. Or Anthony, kick it off, sure. Yeah.
We saw in 2021, the likes of Elon Musk moving the Bitcoin price considerably when he announced that Tesla was sort of buying Bitcoin, and it equally moved downwards when he said that Tesla had sold Bitcoin when it came up in the account. But they only sold, I think they sold a part of the Bitcoin. They still got Bitcoin on the balance sheet. He's still got to agree to let people purchase Tesla vehicles with Bitcoin, maybe that, something like that. And he did say once more than 50% was energy was for global Bitcoin was renewable, green energy, then that would be reaching a landmark that he'd want to see. And I think at the moment we're probably getting closer to 60% of the world's Bitcoin mining using renewable energy. So we've passed the 50 mark. We're probably heading more towards 60%. So if he was to come out and announce something like that, or one of the big tech companies, more adoption there, then you're going to see the rise. The ETF will add something to it, and again, what that does, it's just a sort of like a snowball effect, because then it means that investors will come into the market, and the snowball of that, their companies will want to can invest through a more manageable way of doing it, and more a legal way for companies to invest in Bitcoin through an ETF. So it's as I say, it's adoption. Price range for this year, I think we're probably gonna hold in this sort of band where we are now, this sort of 25 to 30,000. We're seeing we're seeing the global hash rate increase, and it's reaching all-time highs every month. So it's already reached 500 exahash a second during the month of September. And if you remember what we quoted a few months ago, where we're going to be at the end of 2023, nobody was saying 500 in any of those expectations, and we're already there, and we still got three months to go of the rest of the year. I mean, I just listened to Ben Gagnon, who's the Chief Mining Officer from Bitfarms, and Ben is one of the most relatable people in this space, and very knowledgeable people, usually the smartest person in the room. And he's just done the Analyst day for Bitfarms, and he was asked the exact same question: where do you think the hash rate would be? And he said somewhere between 400 and 450, and we're sort of already over that now. And this was only like last week. So the price isn't moving with the hash rate level. So I don't know. I don't fully know, and I can't predict. And none of the three of us can predict where the Bitcoin price is going. We just like to think that post the halving, when the supply gets cut and there's only 450 Bitcoin mined a day, then there's less new Bitcoin coming on the market. That might give it a spike, but it could take 4 or 5 months after the actual halving for that to occur. So, which of the stronger miners are they going to manage through the period, between now and sort of 5 months past time? So basically the next 12 months at sort of the 25 to 30,000 level. And that's going to be the challenge for some miners. For other miners, the likes of Riot platforms, they probably mine the cheapest Bitcoin of all the miners. And I'm about to put out an article this week which will highlight that even further. So I've just analysed Iris Energy's recent update, and the reason I've done that is because Iris only issue half yearly and full yearly numbers, so it's very hard to include them in any quarterly analyst. And so I basically compared Iris Energy to the miners for the first half of the year, and took their 6-month positions and compared it, so I could, give Iris Energy a run for the money with the same period. And Riot came out as the still producing cheapest Bitcoin of all the miners, considerably cheaper. So it's interesting, and some miners we know, and Sebastian on his channel has he's got the numbers as well for the likes of Hut 8, where they're producing Bitcoin significantly higher than the Bitcoin price. And when I say what we're looking at cash costs. We're not looking at depreciation or stock compensation or changes in value of assets. We're looking at only the physical cash costs, because that's what a company needs. It needs cash. It gets, it can sell Bitcoin for cash. It can sell shares for cash, and it has to pay its bills with cash. It has to pay its staff with cash. It has to pay for the energy with cash. So I look at it from a cash perspective, and I know quite a few other analysts and YouTubers. Tom from Talking Investing, he uses a similar approach to me, looking at the cash costs. And at the moment, from a cash perspective, Riot sort of can produce a Bitcoin for 50% of the current price.
Yeah, I want to come back to Riot, especially as it relates to some of the heat and power credits. Tom, for sure, is another one I'd like to get on the channel. I wanted him in here for a 4-way discussion, but couldn't make it work. Sebastian, in your opinion, is there anything that can break us out of this range, or are we kind of waiting on the ETF news from here?
I don't know if the ETF is what's going to eventually break us out. I think it will help, but I think as we get closer to the halving event, like we have done in previous cycles, Bitcoin price usually goes up in that time frame. A couple of things that are interesting is this cycle, we've seen the miners actually go up in value, at least the first 6 months of this year, in appreciation, whereas last time they actually went down a year before the where we had the halving event. So that's kind of interesting to take a look at there. That's a difference that we've seen this time around. This time around, we've also had, I think it's cyclical with Bitcoin and the way it goes up and down. We have companies that go basically belly up. We've had FTX, we've had Celsius, we've had other ones that have gone belly up. that have caused obviously great pain in the markets with the price coming back down. And then when we're in the bear market, we have other companies that are building out, preparing for the next bull run. And that's where the catalyst is also going to be with those companies announcing products and things like that, that's going to push us going forward again. So it's very cyclical in that nature. It has, at least for the last couple cycles. So we'll see if that continues going forward. I think Bitcoin might end up at around 35,000 maybe by the time we get to the halving event. That would be kind of where the price of Bitcoin would have to be for some of these miners to be break even, more or less, 35 to 40,000 or so. Anybody that's above that for the cost is obviously going to have a hard time making it on the cash flow basis, like Anthony said. And yeah, I mean, as far as the blockchain, the network blockchain hash rate right now, it did peak at 500 exahash, but that was only for like a day and then it come back down. If you look at the average, and I think that's what maybe Ben from Bitfarms was talking about, is maybe like the 30-day moving average of the network hash rate, where that's a little bit more steady growth than that, instead of these huge peaks that we're seeing in valleys on it. That's kind of also what I look at when I do my numbers for the miners, is looking at the average hash rate, because you get miners plugging in and turning off miners just depending on the time of day it is, how hot it is, things like that. But the average overall, I think, is a little bit more accretive to where the network hash rate itself is really going to. And being where we are right now, I think we might be a lot higher. But the good thing is, once we get into the halving event, the miners that are not profitable or have older machines, less than 100 terahash per miner, those guys are probably going to be shutting those machines off because they're not going to be profitable at that point. So that should have a good effect for the miners that are mining, where the network hash rate should go down like after the halving event, probably for the next 3 to 4 months. And then depending where Bitcoin price goes, the network hash rate probably will increase at that point again.
Sorry, so, that point Sebastian made is as those older machines get switched off, the hash rate drops and it becomes easier for the more efficient miners to mine, and therefore their rewards become greater, and so they sort of manage to get through that cycle. Sorry for interrupting there, but yeah, it's a good point.
No, it is a good point, and that's what's so interesting right now is generally you'd see hash rate difficulty and overall moving in unison with Bitcoin price. As Bitcoin price goes up, more people want to get involved. But right now we're kind of seeing a divergence. And the other thing you mentioned there, Anthony, that I thought was interesting is historically we've seen price appreciation a couple months after halving, 3-6 months out. Now, it reminds me kind of tax loss selling, and I was talking with Riot CEO yesterday about this. Do people start seeing that and saying, hey, well, last time it took 5 months, so I'm going to buy Bitcoin at 4 months or 3 months? And do you think that may start to see it move prior to halving, or at least closer to?
It's difficult to say. I think Sebastian said right. We always look for differences from this cycle to the previous cycle, but generally there's been a sort of a delay. I'm not, to be honest with you, I don't do the charts. I'm a fundamental analyst, so I look at the numbers. I look at black and white, and I take my hat to those people that do the charts and say this is where the share price is expected to go, or the Bitcoin price is expected to go. But I just look at what's happened previously, and I'm sure all these miners are looking at historically what's happened, how they can prepare for that halving, how they can make sure they get the most efficient machines. And if any of you caught sight of the new Bitfarms machines that were highlighted in Hong Kong this week, just when we thought the technology curve was leveling out a bit, Bitfarms have brought out something that makes the XP look like an ordinary machine now. So, that got a serious amount of support when that news came out in Hong Kong and the videos started appearing. But they've got some serious hash rate, some seriously low joules per terawatt, and so it's I think down to like 15 or 16 now. So it's another sort of 20% drop in it, in efficiency. And I was speaking to some likes of like Fred a year ago, saying that we've seen the graph of the technology graph around machine efficiency starting to level out, and you can only do so much. But it looks like we've just come down another step. So it's like it's good, and it'll be interesting to see who jumps in on this. And they brought out 2 miners. They brought out an air-cooled miner and an immersion miner as well. So that's going to be interesting to see, you know, how some of these miners move into that market, because we've seen a lot of growth this year. Sebastian touched on it. You know, the hash rate growth this year from the miners has probably at least kept up with, for the majority of miners, you know, they've kept up with the global hash rate increases, and they have to, otherwise you fall behind. So, you know, your CleanSparks, when you're looking at just over a year ago, we're at 2 exahash, and now there'll be 16 exahash in probably the next 4 or 5 months. You know, massive growth from them. You know, Bitfarms aiming to be closer to 7 exahash by the end of the year. Marathon Digital finally reached 23 exahash in August. They've still got 4 of that to be switched on, but we're seeing a lot of people are following their wallets. So they've got their own wallet, the Mara wallet, and it looks like they're on track to achieve about 1,200 Bitcoin in the month of September. So that looks like it's going to be a record-breaking month for them, which to my mind means some of that 4 exahash that was waiting to be energized looks like it is getting energized, and it's going to be it's going to be interesting. You know, I mean, interesting times to see who's going to be the first to sort of buy into this latest model, like Marathon and Riot bought into the XP before everybody else, and we're talking they bought in big, massive orders, you know, over a year ago when the XP came out, and you know, CleanSpark have followed that because it's about efficiency. You want to go into next halving with the best miners available. You know, more efficient miners use less power, and you know you're going to get more return from your investment effectively, because you've got those metrics in place there. And so if you've got like S17s and you know the original S19s, you know, they're going to be the ones that probably end up getting switched off earlier than the rest, and you know that's going to be the challenge. But you know, we've seen the Bitcoin price drop, and we've seen the hash rate still go up, and I appreciate the sort of the 30-day average, and that should be the way we should look at this. We can't look at peaks and troughs, but that graph, I can see the line going through that the last year of the hash rate, and it's only going in one direction. It's only going upwards. So it's where does it stop? And Bitcoin price has to play a part in that for it to carry on, because at some point it's just not going to be viable for some of the miners to do that. You know, they can manage with cash if they've got, you know, cash on the balance sheet now. But once that cash is up, then we're starting to look at how else can they raise money. And I'm not sure if shareholders want them to start selling lots more equity to keep operational costs being met.
Now, Sebastian, I wanted to kick it over to you because we've mentioned Riot a few times. We've mentioned heat a few times. Riot was a major benefit of the hot temperature in Texas in the month of August. There were other companies, DMG Blockchain, I know, struggled with heat here in Canada and had to actually turn down some of their rigs. So Sebastian, you brought up an interesting point before we started recording about how do we value these companies, knowing that temperature and seasonality and power credits and all that has to play into these equations. So I wanted to kick it over to you and see what your thoughts were there.
Yeah, I mean, that's a really good question I've been struggling with for, well, the last couple of months here, with Riot having huge amounts of power credits. The power credits would be one thing if they would have to take those credits each month that they get them, but they don't. They have these credits on the books, and they can basically utilize them. I believe, Anthony, you can correct me if I'm wrong here, but I believe they can utilize those any month at any amounts they want throughout. I don't know how long they have to use up those credits, but I'm guessing probably a year. So it's tough to value them based on what they actually produce as far as Bitcoin is, and then what's the Bitcoin equivalent to that that's going to be applied in credits for any specific month, right? So maybe, Anthony, if you could kind of talk about that a little bit, because I know you've been talking about it as well, where you're using the Bitcoin equivalents for the credits on it, but it's still, I don't think it's really apples to apples, because you do have that option for Riot to use those credits any given month that they really want. So, Anthony, why don't you...
So I struggled with this when Riot first started announcing the credits. They were the first miners to really highlight this last year. And when it got to 2023 and we started seeing these credits started to be significantly more than previously earned, I had a chat with Jason. Yeah, you're absolutely right. They don't get the benefit in month, but they do get the benefit the following month. So if they're mining Bitcoin, and the following month bill comes through, the credits are taken away from that bill there. And I mean, until we saw the August update, you could arguably say that Riot were probably covering their energy bill monthly with the credit from the previous month, so it was like an ongoing effect. But when you saw that Riot achieved $31 million of power credits in terms of selling power and using their the benefits from the 4CP ERCOT program that they're part of, which means they curtail certain times of the day, and literally all the miners in Texas are part of the ERCOT program. So they switch off at the peak times, 2 or 3 times a day, and they benefit from getting credits back. And also there's other benefits that they can achieve on transmission costs for the following year. So some benefits are actually further down the line. Now, I really struggle with this as to what I was going to do. But when the likes of Iris Energy, Cipher, and we're going to see BitDeer and Argo blockchain benefited significantly from it as well. Although they didn't put the amount in, they did say that they actually the credit they received would have been better than mining. So that although they can't put a number there, if they'd have been mining 100% of the time, they would have not received as much as the credit that they receive for switching off. So these strategies are really in play. Now, if the miners were hodling everything, I think the argument would be quite right, Sebastian. I think we can't even include the credit in analysis there. But my perspective is, if the likes of look at the biggest miner from an exahash position, which is Marathon Digital, and they're selling say 700 or 70% of their monthly production to pay for their operational costs, then Riot are actually doing the same by not mining. They're paying their operational costs of energy. So I think this we should be allowed to show that there's an equivalency earned. We've got to give them some credibility for using this strategy, and it looks like it's going to be ongoing. I know there's been some criticism from the community saying, "Oh, you're switching off and you're causing higher bills for the domestic population of Texas." Well, when you consider the Bitcoin mining are only like literally a very small percentage, it might only be 5 or 6% of the whole thing. You've got the battery companies there, you've got the car manufacturers who are also benefiting from switching off at certain times and getting these credits. Bitcoin miners are just another industry in Texas benefiting from this. So, and they've come out quite clearly, the rule makers down there, and have basically said, there's not a problem that they're doing exactly what they're allowed to do, and they will continue to receive these credits. So, I think from my perspective, I've used the Bitcoin equivalency, just to show how they're benefiting. And what I've done is, I've even took it a stage further. I said, with the hash rate that you've got energized, how much revenue per petahash have you achieved? So I've come up with another table now that basically says, how much did you achieve with your energized hash rate? That you could, if it was switched on, you could have achieved. So for Riot, they've got 10.7 exahash, and they achieved something like $2,700 per petahash. Iris were next with about 2,300, and then he dropped down to the most efficient miner, which is Bitfarms, and they're getting about 1,800, and from a production perspective, they're the best miner. But they're only getting $1,800 for having everything switched on nearly all the time. So their utilization is quite high. Same with CleanSpark, same with Bit Digital, and 2 or 3 others that are in that group. DMG, for what they've got switched on, utilized everything that they've got switched on. And they can only achieve something like 1,700 to 1,800 per petahash. But Riot, taking into account the credit, we're getting $1,000 a month, $1,000 per petahash more in effect, because profitability is actually increased revenue or reduced costs, and Riot are reducing costs. So it's the same effect as an accountant. And I think there should be some, otherwise you'd have Riot at the bottom of everything. Every table that you come out with, they would be bottom, and it wouldn't be the right picture. There needs to be some sort of balance how we show this. And maybe it's not Bitcoin equivalency, but we need to highlight a way of introducing that the strategy that they're using in Texas is one that pays them more dividends and actually switching on. And Jason is quite open about this. He can switch on 24/7. He's on a fixed price contract down there. He doesn't have to curtail at all, but he chooses to curtail when the economics suit the company to receive a better rate of return. And $31 million of credits was an enormous return that he would never ever achieve if he'd have had 3 times as much exahash switched on than he had switched on. So, I think some credibility needs to go back to the companies that do that, make that decision, so that they're showing it's not just about and it's about Bitcoin hash rate. I don't use hosting in my analysis. I don't use the high performance computing in my analysis. I don't use any, AI started to appear now. So high blockchain or high digital, they've started to receive revenues from using AI from some of their GPU chips. It's in small steps at the moment, but expected to grow rapidly. Probably we maybe need to come up with some more overarching metrics to show how a company is performing against each other. But I'm usually quite open and transparent in the fact that with the analysis on self-mining, I only use the self-mining revenues, I only use self-mining costs. We've talked about, Riot having the cheapest price for Bitcoin. If I was to discuss, Riot's hosting business, it's probably the least profitable business of all the miners, because, they are having to carry on with legacy contracts that were in place before Riot even moved into Whinstone. And they've had to honor these agreements. These agreements run for quite a few more years. And so, they're not profitable at all. They're being supported by the self-mining. So Riot Platforms, is effectively offsetting its losses in hosting with its gains in self-mining. And hence, when you see their overall net position for the whole business, it doesn't look as attractive as when you look at the self-mining element. The self-mining element is by far the most profitable of all the miners, but they have 2 of the big areas. They have engineering and they have hosting, and the hosting business is just not profitable. The engineering is, I'm going to say, probably pays for itself, but the hosting definitely is at a loss. And you can see that quite clearly. All you have to go is look at the hosting revenues that come in, look at the hosting costs, because they're broken down, they're segmentally reported, and it's quite clear they don't even make a gross margin on their hosting contracts. So that's a challenge for Riot, and I'm assuming that when those contracts come up for renewal, Riot will probably having some conversations with the current occupants at Whinstone, and there are 2 or 3. We're talking about 4 or 5 exahash of hosted miners there. So that's bigger than some of the self miners I look at on my analysis. It's a significant chunk. But yeah, that puts it into a little bit of perspective. So from my view, I'm happy to include an equivalency in Bitcoin for the self-mining, or to use some sort of metric that incorporates what they're doing and shows that actually these miners are thinking outside the box and delivering returns that way. But I'd be interested to know your thoughts on it.
Anthony, a quick question for you on this one. So I believe it was in July, we only saw like $7 million in credits compared to the 31 million that we saw in August, right? That's a huge, basically a 4x increase from where it was. Now, that leads me to believe that the regular citizens of Texas also probably had to pay more for electricity in August, a lot more than they did in July. Is there going to be possibly a backlash against any of these companies or any of these programs that they have? Because it is a free market with the electricity prices, and with prices going way up there because there's so much demand for it, is there going to be the backlash that might kind of put a little screw in all of this?
It's something that's definitely down as a potential risk. The fact that it could against them, but the clear message that came out from ERCOT was actually that Riot are absolutely doing nothing wrong, and then Riot published an actual update on that specific topic to say that what they were doing was basically they were following the guidance that they were given. They can curtail. They all curtail when ERCOT asks them to. There's certain times of the day, so it'll be the peak times like breakfast, evening meal. When there's energy switched off for maybe half an hour. It's just small times of the day when it's really high. Obviously, Riot are doing far more than the half an hour a day each way, but they're doing significant amounts. But they've got a fixed contract. So the fixed contract, and I'm assuming the price is around about the 4 cents kilowatt hour. So they can work round the clock at 24/7 at Windstone without having to curtail at all. They don't have to curtail at all. Well, they won't get any benefits, but they'll be able to mine Bitcoin 24/7 with 10 exahash. So that's when they get back to production where we expect it to be. Now, with another miner in the area and the amount of power available, it'd be interesting to see if Riot could actually reach that potential and use all their site, which is a 700 megawatt site, alongside their neighbour, which has got over 100 megawatts in their facility, and how much power is currently available in that specific area. So that's a question maybe for Jason on his next chat. But the strategy they're using at the moment is paying off. September will be another big month. But each time they had, I think it was 10 million, was it 10 million, 8 million in June, and like I say, 7 million in July and 31 million. There's only 4 months when they really can rake this in. This is this 4 month period now, and then it just, you go down onto the, I think it's the 4CP the 4CP is only for 4 months, and then they can curtail power when it's domestic demand is higher throughout the year, but it's the hot months and the really cold months. So there's gaps in between where demand isn't as bad. But I think it'd be in my risk register if I was at Riot, or if I was at Iris Energy, or at Cipher Mining. It'd be a risk there in the risk register, monitor the risk. But bear in mind, these miners have been around longer than the sort of 18 months they've been getting these credit for. So, they'll probably be able to switch back into mining. And yes, the returns might not be as good as they've received now, but they've still got a quite efficient fleet. They're still building out their new site at Corsicana. So I expect, Riot to progress quite nicely. They're going to be at 20 exahash by the middle of next year, with an option for another 15 exahash, with a site prepared to take that amount of exahash as well. So, they're growing gradually. They're not growing like the way that CleanSpark and Marathon Digital have grown in the last sort of year, but they're doing it in a more manageable way. No debt on the balance sheet, very strong balance sheet, Riot platforms, cheapest Bitcoin of all the miners. So they're ticking some of the boxes. But yeah, it's a risk. Going back to what you said, it's a risk, and something that they're probably looking at on a regular basis.
The only thing I was going to add there, Anthony, I spoke to Jason about this. Obviously, they're taking a lot of criticism. Like you said, Sebastian, general consensus is, hey, if you're making $31 million off of us, somebody has to pay that money. I guess the way he put it was, in the month of August, overall with ERCOT, there was about $1 billion of purchasing going on. So 31 million, although it's big for people like us that follow the Bitcoin space, in the grand scheme of things was very minimal.
Small percentage, yeah.
He also highlighted a lot of the industry, like cars and aluminum and airports and whatever, they don't have the option to switch off. So as Anthony said, they could mine all month at 3.9 cents, I think he said. But if they were to do that, there'd be even less supply available. So he said the process of actually selling into that type of market should bring supply up and in turn price down, as opposed to them not participating in the credit. So now I don't know if he's going to be able to explain that story to the average citizen of Texas, but that's how he explained it to me, and in my head it seemed to make sense. So I just wanted to throw that in.
It does make sense.
Yeah.
Yeah, I mean, it absolutely makes sense. What they're doing is legal and everything on the books. But when you talk about the average citizen, they don't really care about that. They're talking about having to pay double their electric bill that they aren't used to paying. So it becomes a pain point, which then gets a pain point put on the politicians, which then they put the pressure on ERCOT, right? So there's always a risk there.
I mean, I come on this channel here and I'm paying $12 a gallon for my fuel, and I'm paying 30 cents a kilowatt hour for my electricity cost. and I don't come on here moaning about it. It's like, these are like, I mean, you guys in North America are, I mean, I see all the, people moaning because the gas prices have gone up like that. Come to the UK and see what the gas prices are over here, and you'll be thinking that you're in discount land over there. It's ridiculous. We're on different ballparks with regards to energy pricing. It's ridiculous. My energy bill for my small apartment has gone up in the last 2 years 400%.
Maybe we should be talking about the utility companies on this channel, eh? Now, as you guys can see.
Yeah, I mean, we don't have like a massive oil supply like they have in America. So we actually buy a lot of our gas from abroad, oil from abroad. So, and these contracts are forward contracts. So, one thing I always find, you see the price of oil, and we're sort of slightly going from Bitcoin, but you see the price of oil increase, and it has been increasing these last few weeks. We're sort of getting like $90 a barrel now, and the fuel stations out here raise their prices immediately, but when the price comes down, they slowly bring it down because they say, "Oh, we're locked into contracts." I'm thinking, well, if you're locked into contracts, why do you ramp it up so quickly at the start? They're like winning at both ends. They're effectively profiteering, and it's just it's just bad. But it's just one of the things that we've got in the UK. It's not a great sign at the moment. So when I hear these energy prices that you guys are paying over there, no one's Bitcoin mining in the UK at the moment. Nobody.
Yeah.
Unless they're doing it illegally and tapping into some energy illegally, because even the business rate of energy. I mean, if I'm paying 30 cents a kilowatt hour, businesses aren't going to be paying, massively less than that. And, we're even seeing miners who are paying 5-6 cents a kilowatt hour struggling, I think Fred said Mara were paying 7 cents a kilowatt hour, which includes their hosting fee. And if you look at what their margin is, their gross margins is like 34%. And then you've got all the operational costs. So you've got all the staffing costs, all the TNS costs. They sponsor loads of things, Marathon. They go to all the big conferences. You always see their names up in lights, So the conference in Dubai, I think 4 or 5 of the miners are sponsors there. And we're not talking small amounts. It's a significant amount of sponsors. So these companies require quite a lot of operational, expenditure. And so when you've got a margin of, 32-34%, and then take off the other costs on top of that, you're sort of getting close to like break even, it is a challenge. It is a challenge at the moment. So that's with what I class as like low electricity costs. Come to Europe and you're in a different, Scandinavia's okay. They've got massive amounts of energy up there, hydropower. So Sweden and Finland and Norway maybe. There's a lot more mining going on there. Iceland with geothermal, they probably got some of the cheapest energy in the world. So you've got Bit Digital and Hive Digital working in Iceland and tapping into that enormous amount. And Bitcoin mining in Iceland now is more than the domestic usage. So mining is actually higher than domestic usage in Iceland as a country. So and Bitcoin mining is not even the biggest industry there. Aluminium smelting is the biggest industry in Iceland, and they use more power than Bitcoin mining. But, it's interesting.
It's incredible to see how it's just taking the world over, and so much change and advancement in the space. As you guys can see, the three of us definitely could talk for a while on this topic, and I know the videos covered a lot of ground here. So you guys, I really appreciate the time. I know we have a lot to talk about still. We're touching now on efficiency and some of the new, Anthony, you mentioned some of the high performance computing, the AI, some of these new verticals coming into the Bitcoin space. So maybe we can put those on the map for next time. But I wanted to thank you both for your time. For anyone watching, obviously appreciate the support, and feel free to like the video. Subscribe to the community. I'll leave the link for Sebastian and Anthony in the video description below. You guys, thanks so much for the time today. Great conversation as always. And I'll kick it back your way for any closing thoughts.
Yeah, thanks very much, Bryce and Sebastian. I mean, a closing thought for me. I mean, we'll maybe talk about this in a future video. I'll be honest. I was slightly skeptical of the AI business from a Bitcoin mine perspective. I mean, we'll look at the two that were sort of like flagging this as their next, the next big business, and that was Hive Digital and Hut 8. And bear in mind, these two miners had massive amounts of GPUs available that weren't really bringing in sufficient return on the actual investment for those miners. So they're now focusing those miners into the AI side of things. And when Iris Energy announced they spent 10 million on some $30,000 chips to start AI processing at their Childress site, it got me thinking there may be more to it than this. So I'm a little bit more open-minded now. I must admit, I was more sort of like, I think it's covering up bad news, good news trying to cover up bad news. It's like, how can you grow from where they were earning now to where they're expected to be earning? I mean, Hive Digital, just very quickly, a year ago before the fork, so August last year, with their Ethereum mining, mined $5.5 million of Ethereum mining last, and using those chips now, or in this year, they were earning $200,000 with those same chips doing Bitcoin mining. So when you drop from 5.5 million to 200,000, that's a massive drop in your revenues. And Hive Digital had the highest revenues in 2021 of all the miners, including Marathon Digital, because they had a very successful Ethereum mining business. And in 2022, for the first 9 months, again, very profitable. But what we've seen now is, that business has gone, and they're trying to look at how to rejuvenate some of those revenues. And maybe the AI thing, I was a bit sort of like, took it with a pinch of salt, but I'm starting to be a little bit open-minded because other miners are coming into it, and Iris Energy don't tend to spend money unless they've done some real thought process into this. So it looks like there may be more to it than I initially thought, and maybe that could be an article I do in the future on AI and what the miners are doing to move into sort of like integrating other businesses in their business. So yeah, interesting.
How's that for a cliffhanger, Anthony? More to come, to be continued. Sebastian?
Yeah, so I just wanted to say thank you to both of you guys. This is always fun. I enjoy this type of communication back and forth, talking about the topics that are obviously important to our viewers. And I just love the community that we have. I mean, it's great that we can come on here, share our thoughts, our insights, and hopefully people also learn from it. So I look forward to the next one, and thank you so much for having me.
Okay, you guys. You bet. Anthony, you've got a big month coming up in October. We look forward to hearing about it, and thanks so much for the time, everyone.